Financial leverage. Financial leverage refers to the amount of debt used to finance a firm's operations. So also, firms sometimes borrow money to finance its activities. From the point of view of costs or charges, these sources of funds wherefrom a firm borrows may be categorized as those which involve fixed charges such as long-term debt, including preference shares, bonds and debentures, as well as those which does not involve fixed charges. Hence, it is the end result of the presence of fixed financial charges that is present in a firm's income stream or statements, which relates to the financial activities of a firm. To introspect the findings, we may still see that these fixed charges will not change with the earnings before interest and tax or with operating profits. Regardless of the amount of EBIT, these fixed charges need to be paid. Only after the payment of these fixed charges, the earnings which is left over will belong to the shareholders. However, financial leverage is one way also concerned with the effects of changes in EBIT, which normally belongs to the shareholders. In that case, financial leverage is defined as the firm's ability to use fixed financial charges to extrapolate the effects of changes in EBIT on the earnings per share. Hence, after accepting the dependence fully, now our discussion should center around EBIT EPS analysis. So first we will see what are the formulae which are used to find financial leverage. So as told, financial leverage, it has to do with basically earnings before interest and tax, and about the fixed charges which has to be paid whenever they take a loan or debt. So, and accepting the dependence fully, now the discussion is around EBIT and EPS analysis. So, first we'll see what are the formulae. Degree of financial leverage is expressed as change in EPS, earnings per share in percentage, divided by change in EBIT in percentage. So, degree of financial leverage should be greater than 1 for it to be acceptable. Now, the DFL or the degree of financial leverage should also be expressed as percentage change in EPS divided by percentage change in EBIT. It is also given by this formula. Alternatively, degree of financial leverage can be given as EBIT over EBIT minus interest minus preference dividend by 1 minus tax rate. That is also a formula which is used to find financial leverage. Now we'll take a look at the example or an illustration to see how it is made effective in the case of financial leverage. So in this illustration or example, we have financial leverage where a company has rupees 10,000 10% debentures and 500 equity shares outstanding in the 35% tax bracket. Assuming three levels of EBIT, which is 5,000, 3,000 and 7,000, calculate the change in EPS with a base level of EBIT, which is rupees 5,000. So we are given EBIT at 5,000, then it is 3,000 and 7,000. So we'll take the base calculation as 5,000. And we also have 10,000 10% debentures, rupees 10,000 10% debentures. 10% is the interest on that 10,000 which we have to give, as well as 500 equity shares which is outstanding in the 35% tax bracket. So we'll see how the calculations proceed. So we are trying to find out EPS at EBIT levels and also degree of financial leverage. So the base is 5,000 rupees 5,000 EBIT, that is the base. Now, what is the interest? Interest is 10% on rupees 10,000, which is given here. So, which will be 1,000. So, what is the difference? The difference is earnings before taxes, which is 4,000. Now, what are the taxes? It is 35% tax bracket. Now, taxes are to be paid, which is on the earnings. Okay, so what is the earnings before taxes? It's 4,000. 35% of 4,000 gives 1,400. So that is taxes. The difference of it is the earnings after tax, which is 2,600. What is the earnings per share? There are 500 equity shares. So 2600 is the earnings after taxes, which has to be divided by 5000 to get 5.20 is the earnings per share. That is for case 1 where the EBIT is 5000. So the earnings per share is 5.20. Similarly, for case 2, when the EBIT is 3000, the earnings per share is 2.60. And for case 3, it is 7.80. So what is the change in percentage change in EPS? It is exactly half. See, 2.60 into 2 is 5.20 in plus 2.60 is 7.80. So between 5.20 and 2.60, the change is minus 50%. And between 5.20 and 7.80, the change is 50%, plus 50%. So that is a change in EPS. What is the change in EBIT? Yet considering case 1 as the base, so the change in EBIT is from 5000 to 3000, which is minus 40%. And for case 3, it is from 5000 till 7000, which is plus 40%. What is degree of financial leverage? It is percentage change in EPS by percentage change in EBIT, which is 50% divided by 40%, which is 1.25. So we see that whenever the EBIT goes up, earnings go up, the degree of financial leverage, it is constant. It is actually 1.25. It is positive. And when the EBIT is lessened, it is gone to 1.25, which is on the negative side of things. So this actually sums up the discussion on financial leverage.